JJ the CPA here. Hope you're doing well. So we have finished up week 2 of tax season 2023, and the IRS has announced that e-filing will begin Monday, January 23rd, and we will be off to the races. IRS recently came out and indicated that storm victims out in California for the April 18th deadlines, they now have until May 15th to get those things in. Also, January 17th, the fourth quarter estimated tax payments are due for 2022, but take note that first quarter estimated tax payments for 2023 are going to be due April 18th. So don't get caught watching the paint dry on the fence related to this, because if you do owe for 2022, well, you got to pay that by April 18th, and you'll need to come up with first quarter estimated tax payments on that same date for 2023. Don't forget, for 2022, for those businesses that have research and experimental expenses, you now can no longer expense them, but you do get to amortize it over 5 years. And any expenses throughout the year that qualify, the midpoint of the year is your start date for all of those expenses, regardless of when you spend it. That is going to be the start date to amortize it over the 5 years. Good news on it, though, is that you no longer have to wait until that research and experimental expense generates revenue for you to take that amortization. IRS came out with a lot of guidance for those that have commercial vehicles that are going to qualify for the clean energy credits, so check that out. By the way, in the body of this video, I'm going to give you links to many of these subjects, so if you'd like more information, you can look in the body of this video. Also, with Form 1099-K, we're back to the old rules. We don't have to worry about 1099-K being sent out for that lower threshold that was expected of $600. Now if it's back to the 20,000 or more than 200 transactions, then a 1099-K will be sent out. A 1099-K is from those institutions that process your credit card or payment from Venmo or PayPal or Cash App or things like that, where they've collected dollars on behalf of somebody to pay it to somebody else. That's what the 1099-K is. Now, I want you to note that that didn't change any of the other rules related to other 1099. So for 1099 miscellaneous as well as 1099 NEC, those need to be sent out to the recipients by the end of January. Now, if you are filing Form 1099 NEC, that's non-employee compensation, well, then you do need to get that filed with the IRS also by the end of January. Now, for 1099 miscellaneous, if you're paper filing, you have till the end of February to get that to the IRS. If you're e-filing that Form 1099 miscellaneous, well, then you have until the end of March to get it to the IRS. On the Schedule K2 and the Schedule K3, this is for S corporations and partnerships that may or may not have foreign activity or foreign income. So the IRS has updated the instructions related to that, and good news on that. Originally, we had January 17th as a date to get notice out to shareholders and partners if that S Corp or partnership was going to qualify for what's called the domestic exception filing. With that being said, that's no longer the case. As long as that S Corp or partnership that's meeting the domestic exception filing, then as long as they put a note or a statement, if attached to that Schedule K1, then they've met that qualification, assuming that they've met the other qualifications. Now, if you are somebody that owns an S Corp or a partnership and you need that Schedule K2, Schedule K3, then you do need to inform the S Corp or partnership on or before August 15th of 2023 that you need that for 2022. Also, make sure that you're increasing your withholdings related to your 401k or simple for those that have that coming out of wages, because those dollar amounts went up in 2023. Also, keep in mind that April 18th is the date you still have to get a deduction for the following items for 2022, which would be for your HSA, your IRA, or if you get a deduction for a 529 plan. Again, you have all the way until then to be able to put dollars in and get a deduction for the prior year. Also, you have till April 18th to put money into a Roth IRA and it be something counted towards 2022. If you're interested in home efficient improvement tax credits, IRS also came out with guidance related to that. I do want you to note that many of those credits have very low thresholds and lifetime limitations, some up to only $1,500. Now, if you are looking at clean vehicle tax credits for electric vehicles and hybrids, The Inflation Reduction Act that came into play last August is now in full effect for 2023. That credit is a maximum $7,500 for new vehicles, and they did come out with a used credit available up to $4,000. Take a big note here, though, that if the vehicle costs too much on the MSRP or you make too much, you may not ultimately qualify for that tax credit. Great news on this, that the IRS has not only just given us guidance, but they've also given you a way to look up that make and model to see what the credit would be available for that vehicle, as well as a way to look up the VIN specific to your vehicle to see what it qualifies for. So be sure that you're really doing your homework on this before you get one of those, if you are doing it with big anticipation of getting that tax credit. For 2023, bonus depreciation under Code Section 168 for businesses is now up to 80%. Either new or used assets still qualify. Also, the mileage rate went up this year to 65.5 cents a mile for 2023. Meals for 2023 for business are only going to be deducted for a 50% margin. Now for 22, you do get to deduct that 100%. Now, if you do pay employees and you're sending out W-2s and filing that with the IRS, both things have to be done by the end of January. Also, in the body of this video, I'm giving you a link to a checklist of major items that I tell my clients to look for, because those should be start arriving in your mailbox and email for all documents related to 2022. Those are to be sent out to you by the end of January, so you really should have most everything by early February. Note that if you do have investments with a large brokerage house, then they do have till February 15th to get you that annual tax statement to show interest and dividends, foreign tax credits, stock sales, as well as then the basis related to that. And therefore, by about the third week of February, you really should have everything, and you should be then able to get that to your tax professional or get after getting your tax returns. No reason to wait. Speaking of large brokerage houses, on those annual tax statements, be sure that you're looking at the final pages of it, because you're going to see potentially investment expenses. And remember, those are no longer an itemized deduction on Schedule A, if that's something you elect to do, but it is a deduction in arriving at your net investment income tax. That's additional 3.8% tax that can tacked on to passive investment income if your income's over $250,000 married filing jointly, or $125,000 single. So don't miss that deduction. Be sure that you're looking for that. For sole proprietors filing Schedule C, what you want to start doing now is, you are probably waiting on your Form 1099s to tell you what your income is, but keep in mind, no matter what the 1099s show, you do need to reflect and pay tax on the income that you collected. It's not just based on what you received on Form 1099. Also, start gathering up your receipts and putting together your expenses so that you can get after filing Schedule C. Remember, the net income on Schedule C is going to be subject to an additional tax. That's self-employment taxes of 15.3%. Be sure that you're looking also at the home office deduction and whether or not you qualify. It is something that you can take. There's a simplified method up to $1,500 to help you beat down that income subject to not only income tax, but this additional tax. Also, start doing your analysis related to your vehicles, because you can do either actual expenses on your vehicle or that mileage method. Now, last year there were two mileage methods that you had to look at for the first 6 months and the last 6 months. I'll note to you that that mileage rate did go up for 2023 to 65.5 cents a mile. So with Schedule C filers, you get to pick the higher of either actual expenses or that mileage rate. So start the analysis now so that you can be sure to get the biggest deduction possible. For S Corp owners and partnerships, be sure that you're getting your banks reconciled. Ensure you don't have outstanding checks or deposits that are never going to clear, so you don't incorrectly pick up income or expenses. The other thing is, if you have business loans, S Corp's partnerships, be sure that you're getting a hold of what the balance due to the creditor is at 12/31, so that you can ensure that you're writing off the right amount of interest expense last year. Also, if you have any type of investments or activities in cryptocurrency, take note that, like years past, on Form 1040, right on page 1, you will need to mark yes or no if you have any involvement with that. The IRS is now calling that digital assets. The IRS did recently announce that those brokers that are tracking cryptocurrency and the sales and the buys, they have relaxed the requirements of what they have to provide. So if you're with a group that doesn't keep great details on that, well, you better get after figuring out, most notably, what your cost basis is if you did sell any cryptocurrency in the prior year, because it is treated as a capital asset, which means that on the difference between what you bought and sold it for, well, then there's going to be potentially a tax consequence for that. Now, if it was a loss, well, of course, then you're going to have capital losses. Quick note, I do have a boot camp for tax season tax seminar you can get instant access to. I'll put a link to it. And running out January 24th is the opportunity to join Group 51. I'm never going to open it up for the opportunity to join it again. Those that join by then, well, they'll be able to consider joining in future years. But nonetheless, I'm closing that membership forever. So if you're interested in that, it is seminars that I give throughout the year. It is up to 52 hours right now of continuing professional education, gives you access to consult with me, private Facebook group, all access. We also have a retreat mid-year out in Colorado. Thanks for tuning in. I'd love it if you check out my seminars, check out that boot camp, Group 51, and I will be going live as often as possible this tax season. And really the purpose of it is to allow you to come onto the live and ask questions. So I'll be doing live Q&A. So be paying attention to that. And with that being said, I hope you're having a great tax season so far. I'm going to do this weekly update and release it typically on the weekend. That way we can see what's going on as tax season progresses. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.
JJ, the CPA is here. Let's go, let's go. Yeah, yeah. Money, 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 money. You know what it be. Tell them all I do is work. Cause money never sleeps. Yeah. You never met a